Hello and welcome to this Forex Preview at XM.com. I'm Maria Bashardis, and joining me is investment analyst Marios Hadjikyriacos. We'll be discussing the Swiss National Bank's upcoming policy decision and what it might mean for the franc. So Marios, given that the SNB typically mimics the actions of the ECB, markets think there's a chance the SNB will cut rates this week. Do you think this is a strong possibility?
Well, first let's discuss why the SNB tends to follow in the ECB's footsteps. That is done primarily for the exchange rate. The franc, as we all know, is a safe haven currency, tends to appreciate in times of global turmoil and uncertainty, like in the past few months. And, a stronger currency really pushes down on economic growth and inflation. It makes it harder for both of those variables to accelerate. So the SNB wants to keep the franc as weak as possible. That is why it tends to follow the ECB when the ECB eases. If it doesn't ease, that would argue for the franc to appreciate against the euro over time, which is a situation the SNB wants to avoid. Now, we've recently seen the ECB deliver a large stimulus package, and that's why investors think there's a chance that the SNB follows suit this week. However, I don't think that's a strong possibility. I think they are more likely to remain on hold. And the argument is quite simple, really. Switzerland already has the lowest interest rates globally at minus 0.75%. What does that mean? It means that the SNB doesn't have a lot of rate ammunition left in the chamber. It might be able to cut rates once more, but that's it. They're at the lower bound. So if you are the SNB, the question is, do you want to use your final bullet on rates right now, or do you want to save it in case a global shock hits a major shock hits the global economy, for example, like a global recession or perhaps a war in the Middle East, a no-deal Brexit? I think they are more likely to want to preserve some ammunition in case such a shock hits, and therefore I think they are more likely to stay on hold this week.
Okay, right. So assuming they don't cut, how is that likely to affect the Swiss franc?
Well, right now markets are pricing in an approximately 30% chance for a rate cut this week. So assuming that the SNB stands pat and disappoints those looking for a rate cut, that would argue for the franc to spike higher on the rate decision.
Marius, thanks so much for joining me, and thanks for watching at XM.com.